Welcome back. All right, here we go. We've got Jerry Slusowicz here, who is here on behalf of Pacific Financial Planners. Always welcome to have you. How are you?
Doing great, Lisa. Thanks for having me again.
Good, good. Well, you're welcome. And, you know, you were talking a little bit before you came on, and we're all paranoid, right? Because we've got a volatile stock market. We've got interest rates that are rising. I mean, and inflation, which is kind of off the charts. So I was going to say, I would assume people would be asking you, lots of questions, or how do I stay safe? What do I do now? I mean, a lot of things.
Right. I mean, it's been a very, very difficult year because of the multiple things you just mentioned: inflation, interest rates, and the stock market. The stock market had its worst start to the year since 1970 on the S&P 500 and 1962 on the Dow Jones Industrial Average. I mean, we're talking about 50, 60 years worth of time frames. That's a long time since we've seen these type of conditions. So people are worried, as they should be, but it's important to just make sure that your money is safe and protected in some form or fashion, and that's what's really important.
Right, and that's the one thing that I think is nice to have someone like you and your company, is that you can help monitor the amount of money that they lose or gain, right? I mean, you're not like of a crystal ball, but you can help them maybe not lose so much money sometimes.
Lisa, whether I'm doing it or if they're doing it themselves, the one thing that people need to understand, investors need to understand, is risk management. No one, myself, Warren Buffett, you, we can't predict the future. I mean, we might have the best laid plans, but what we can control is the risk. So you do get to decide how much you're willing to lose. That doesn't mean how much you're gonna lose, but how much you're willing to lose. And then, so you something called a stop loss, and it's just a safety net underneath. So if you're using mutual funds, you can't use a stop loss, but you can put a predetermined exit strategy in, and that protects you. And you should have that every single time. I have done this since 1990 using stop losses, so well over 30 years, where every position we ever buy, the minute we buy it, we say, okay, this is the most we want to lose on this position. And if we start to have profits, well, how much of our profit are we willing to lose by trailing that with an exit strategy? So that's something that you can do. So it limits the downside. But it's really important that people have, some sort of risk management strategy in place. And then, it comes down to where should you be today, given the environment.
So let's talk about those people who maybe have mostly mutual funds. What would you advise them to do now?
Well, again, it depends on which type of fund. So hopefully if you're a senior in this community, you've got some allocation that's not as risky as, let's say, someone in their 40s and 50s. But I'm going to tell you, Lisa, unfortunately, I see these portfolios all the time where it's something that, maybe their spouse had for the last 20 years and they've gone beyond and they're not certain what to do. So they just continue to ride that, that horse, if you will, that brought them. And it's not always a good idea because the environment has changed dramatically. As I stated, that this was the worst start to the year. And so I looked at that and I said, well, if this was the worst Dow Jones start since the early 60s and then the early 70s for the S&P 500, what happened in those years, the second half of the year? And in both cases, the market did rally in the second half of the year. The S&P was up something like almost 26%, and the Dow Jones was up about 16%. So we did have good second halves of the year. Does that mean we're going to have a good second half of the year this year? Who knows? This is the 7th worst start to the year for the Dow since 1900, which is when it was invented. So that's what, 122 years. And 5 of the 6 previous, so we don't know what this 7th one's going to bring, but 5 of the 6 previous, the market actually did end up in the second half of the year. So I want to bring some good news to the program today.
Boy, we hope, right?
But those people with mutual funds ought to, at least today, take a look at the recent lows, because we've been rallying the last couple of weeks off the bottom. We're staying, just a little bit higher than the bottom. You ought to look at that and say, okay, where is my point of maximum pain? And it should be the recent low for whatever position you're in. And at least then you can get out, you can get in some cash and wonder, because today's cost of trading should be zero. There should be zero cost to buy, zero cost to sell. So I call it insurance. If you want insurance, that's that exit strategy, that stop loss. and look at those recent lows. If they need help, they can always call me or come to our financial forum,
Right.
which this time it's a little bit different this month, but and you can get your questions answered for free.
Okay, so let's talk about an income specialist, because you mentioned that. What does that mean?
Well, a lot of the people in this community, when you retire, you go from having a job that pays you an income to, you get Social Security. But Social Security was only designed to give you maybe 40% of what your pre-retirement income was. So where do you get the other 60? In days gone by, people had pensions. I don't have a pension. I don't know about you, but most people don't, but some do, and those are fortunate. But sometimes the pension's not enough either to cover them. Mm-hmm. So they need income from their portfolio.
Okay.
And so when you invest, you are investing either for growth, to have it go higher, or for income, and that's taking the dividends and interest out. Mm-hmm. And so when you get close to retirement, it's safer to go for the income, because it's like having a rental property. You just want to make sure that the rent comes in. You're not that concerned about the valuation of that rental unit that you don't live in. So we invest for income as opposed to growth, which means we specialize for retirees that need income.
Okay, so is that what you refer to as your world of income?
Well, the world of income, again, most advisors, just because of they probably got in when I got in the 1980s or 1990s, when the stock market was in those go-go years, right? Mm-hmm, mm-hmm. And the thing about that is that they invested really for growth. And I had switched. I said, I want to work with people that are getting close to retirement, because I started working with people in the village here in 1989.
Oh, wow. Okay.
Yeah. So they needed income, and I said, well, geez, how do you do that? So there are things out there like closed-end funds, convertible bonds. There are, obviously people know high dividend-paying stocks and things like that, but real estate investment trusts, REITs they call them. Yeah. And there's alternatives like business development companies. There's alternatives to the market, stock market and bond market, that pay sometimes 5, 6, 7, 8% dividends. And I get people sometimes saying, well, that can't be real. Well, it is real. I mean, I could show you the history that these things have paid those kind of dividends for years and years and years. Okay. And through a variety of investments, we can create a portfolio that provides the safety and income that the retirees in this community need.
Okay. Now, you had sent over a chart, and I wanted to show that, because what I'm looking at it, I can't figure out what the heck it is. So maybe you can help our residents understand. It's I know it says 1970 on it.
Well, that's the year. That's the stock market. You can see at the very bottom, January on the left, and all the way back to January on the right. So that was what happened in 1970. The first half of the year, it went from 92.06 for the S&P 500, which is now really high in the 3,000-4,000 range. It went down 21%. This year we were down 20.5% in the first half of the year.
Oh, I see. Yeah.
And it rallied 26% on the right side of the screen. Mm-hmm. By the end, it actually closed slightly higher on the year. That was the last time that happened. I had another one as well for the Dow. In 1962, I showed the December 31st value, and it dropped, I think, around 20%, and it rallied 16% in the second half of the year. For the NASDAQ, which was created in 1973, this was the worst start ever, so I don't have any history to look back. Yeah. But in the end, this is the little good news chart that I said, well, what happened after those things? And we could get a good rally in the second half of the year. Yeah. It may happen. I'm optimistic, but because we're going to find out soon, but we're probably in a recession for the first half of the year, and we have this high, pesky inflation, which means higher prices. Right. The problem with that, Lisa, is when you have a stagnant economy and high inflation, they call that stagflation. And we had that in the late 70s, mid to late 70s, and those weren't good years. Right. And so, it's important that we have policies to overcome them. I know the Fed's going to raise interest rates later this month, probably 0.75% to 1% to try to stop that, but we need other things to come in play too. Otherwise, it could get worse.
Exactly. Now, to discuss certain types of income and things that other people are doing, you do have a forum happening, and that is July 20th this time. So that will be tomorrow, Wednesday.
Right.
Not Thursday this time.
Well, yeah, typically it's the last Tuesday.
Oh, gotcha. Last Tuesday. Okay.
Yeah, last Tuesday.
This time.
This time, yeah, it's because of my travels.
So you're traveling.
Yeah,
All right.
So I'm going to be out, and we're able to work with the village to change the date. So if anyone wants to make it on a Wednesday, then they could come to this one. Otherwise, they're always the last Tuesday of the month from 3 to 5 p.m. Again, it's free to attend. Ask any questions, and it's a groupthink type program. Yeah, I facilitate it. I usually pick a topic, and this time it's obviously inflation again, because it's the topic of the du jour.
Exactly. I bet. All right, well, perfect. Thank you so much for the information.
Thank you, Lisa.
Always great information. And maybe next time, bring one of your clients from the village.
Okay.
Have them come on if they don't mind.
We
want to hear how good
out.
you are.
Okay, that's a good idea. We'll work
All right,
that out.
thank you.
Thanks.
If you want more information about the forum that's happening tomorrow, that will be the 20th on Wednesday, you can call 949-219-0692. We'll be right back.